one.
Q2 earnings season rolls on, and we got a mixed bag here in the big tech. We'll try and figure that out. We got Coke, we got Visa, we have Texas Instruments. Did you see that buyback by Wells Fargo? Does that make any sense at all? Angie Setzer at 8:35 to talk about the commodity markets. It's hump day. It's pre-market prep. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. We're starting the day in the S&P futures just a little bit in the red, 7.5 handles at 45.8850, trading just off the pre-market low. Buck taking the breather, down 20 cents at 100.90. Bonds basically flat here ahead of the big Fed meeting. Crude giving some back, down 92 cents at 78.71. Gold trying to make it to 2K, up 980 at 1973.50. Silver up again, up only a nickel though at 24.73. In Bitcoin, quiet down here, 29K, 140. We're down $40 in Bitcoin futures, and we bet that will move off the Fed results. So I have a question for Dennis. Let's bring in Dennis here.
Sure.
Dennis, did you see the RTX news yesterday?
Ha. Joel's got to dig in that wound. Dig. Just hit me with it. Hit me with it. The example was brutal. I'll give you the example. It was brutal. The point was valid, but the example was brutal. The diggers dug well, though, Mitch. I got to tell you, man. The diggers sometimes come up with some good stuff, but it was still an iceberg, and somebody obviously caught that before the rest of the market. So it tells you. So let's just take it back to a teaching point here. It tells you sometimes you can actually dig through these reports and find something, because the stock was, trading only down $3 the entire pre-market until people really started to get a feel for it, and CNBC talked it nonstop.
Oh, they did. Too. They did.
Oh, they destroyed it. It was destroyed by media because they could not let off, on talking about it. But, even the CEO got on there and said, this is going to be very minimal impact to earnings. But I didn't know they're going to rip the planes apart. I'm like, I thought they look at the plane, parts got to be inspected. Oh, you look, that one's good. No, they got to take the planes apart. Well, that's a little bit of a different story. And that's the problem when you're talking news live and you don't have all the facts. There you go.
It's funny.
I know they're ripping the planes apart.
It's funny because when I'm
Give
on
me the heat, I deserve it.
I know, like when I'm on with Mitch, and sometimes when we come on in the morning, I'm like, what happened at 2:02 a.m. in like 38 seconds? Or I used to do that when I was in the office of the news desk. I'm like, news, and they look at me and they're like, Joel, there's no news. The S&P's just moved 10 points. I'm like, I'm telling you, there's news on this stock.
There's always something.
We still yell the dig. Find us the news.
There's always
and they
something.
do. They'll find news, and sometimes they find good stuff, and sometimes they find not so good stuff. Yesterday, whoever dug that for CNBC, because they were the first to report it, those diggers did a good job. So props to the digger on CNBC. He found the devil in the details.
Okay,
that's what happens there.
Yeah, or she, or the seller, he or she. So okay, so
Nick Brown's the news too. We'll give a shout out to Nick. He finds the news too.
Okay,
all right. Before we get to the major reports, right? Let's just really quickly just put out there. I don't want to do too much talk on this. I think we all kind of expect the same thing, but of course, FOMC meeting today. All eyes on Fed Chair Jerome Powell at the conference. The market is pricing in around 98% chance that the central bank raises interest rates 25 basis points. I think this is just a given, right? I don't think any of us are expecting anything else. The only thing that we will be watching for, of course, is the fireworks at the conference.
The tone.
Can he say anything, right, that would actually make us feel like the Fed is getting a little bit dovish, or will they stay hawkish with the mentality that they're trying to, at no matter what, get inflation back down to that 2%, and maybe showing that they could raise even further the rates. All the questions that we will have.
I mean, I thought he was hawk. It was a hawkish pause last time, and the market ripped my face off. So I really,
this market just likes ripping faces off.
Yeah,
Yeah, he does.
I'll just leave it to you guys. We could talk commodities at 8:35 with Angie. I mean, it's been, to me, it's been just too easy with this fighting of inflation, and and we'll see. What they have to say. I mean, what they've done has worked so far. Dennis, what's your opinion? I mean, it's hard to trade the Fed.
Mitch is right. We know they're going the quarter. It's a matter of what is the tone. Are they talking like one more and done, like one and done? Because the market would applaud that. If he gives hints of the one and done, the party probably continues. If he starts talking about, well, we need more data, we need more, and not hinting of the one and done.
They're not one and done, but he's not going to say that. He is not going to say that.
We know they're going one and then one more. So saying in the conference they already went one, but one more and done. Then if he hints, that'd
be crazy.
Yeah, what we're all looking for is not necessarily if it's 50 basis points even more. I think it's just the pivot, right? That's what we're more focused on.
We just want to see
close
is stop.
Is that pivot?
Stop raising rates. That's what we want to see. Yeah. That's what the market wants to see.
But
let's be honest here. If he has the market where he can be tough, because this market is tough.
Exactly.
The market has held up so well. It's not like we're in the gutter here when we're down, 100 handles.
It ain't the bear market anymore.
Yeah, we're full bull ramp FOMO mode. He's almost got to go to irrational exuberance talk like Alan Greenspan. So he probably is going to talk tough here. And this market probably needs it. It needs a little bit of cooling. I mean, this market finds a silver lining in everything. And maybe we should take it to the Microsoft earnings, because they were trying to buy this thing up last night too. Even though the earnings were not fantastic and the Azure numbers were not great either, the stock was actually it actually went green momentarily just after 6 o'clock until the AI poof happened.
Let's give the Microsoft numbers here. Q4 EPS coming in at $2.69, beat the $2.55 estimate. Sales at $56.2 billion, beating also the $55.47 billion estimate. Intelligent cloud revenue that includes all of them was up 15%. More personal computing revenues were actually down 4%. Windows OEM revenue down 12%, device revenues down 20%. And then when you look at it, of course, Dennis just mentioned it, Azure cloud revenues slowed from 27% to 26% this quarter. But what's really being compared is the year-over-year number, where this was at 40% a year ago this quarter.
Yeah. So, and Microsoft priced 33 times earnings here now, Joel. 33 times earnings. So when you start seeing Dan Niles, if Dan Niles on CNBC, you unmute the TV, because Dan Niles is a smart cookie, and he was on there last night on Sully's show. And I'm like, I'm going to hear what Dan Niles has to say about Microsoft, because this guy's smart. And Dan Niles comes on and he says, when I saw the numbers, initial numbers, you're like, well, those are fine. But then he digs down and saw the Azure numbers, and it was going from, the growth is still slowing there. And this is their growth engine. Like, this is why Microsoft at the current time, people are obviously looking even farther into the AI story, but they're also looking, their one growth business that they have cooking on, firing on all cylinders right now is Azure. And he's like, that's the second quarter in a row where growth has slowed. Dan now said, as soon as I saw those numbers, I sold the stock. He says he sold it at 348. He says I also sold Amazon on that as well, because obviously Amazon Cloud Services is going to get impacted as well. Stock was still holding up. We knew those numbers, and it was holding up, and it actually temporarily went green.
It did. I saw it.
Unbelievable. So it was down to 339. It had come all the way back and went green on these numbers. But what really put the stock in, and what's tanked the stock on the call, was when they started talking about AI specifically. And there was one comment that I think really tanked it. It was from the CFO. And he said that Microsoft says the growth from AI, so the CFO said the growth from AI sales will be gradual. And I'm like, oh boy, that is something you cannot say when you are in an AI bubble. So they are priced to AI perfection. and you want to hear like AI growth explosive. You want to hear like other words. You cannot hear from the CFO that AI growth will be gradual. So now you're telling me your Azure is slowing down, the growth slowing. It's still going up, but the growth is slowing. And you're telling me the AI, which you have basically Microsoft's tacked on 50 points from AI, and they're telling me that those sales growth is going to be gradual. That's not the word you want. You want like, you know, a tougher, like a better word. Robust, explosive, not gradual. And I think the bots saw that and heard that commentary, and that's when we had the hard tank from 351 down to 340 in like a blink of an eye. So that's, you know, and that's why the stock is down here today. But there's nothing great here. This is 33 times earnings. Microsoft, I had sold my Microsoft that I had for years in my portfolio when it got to 26 times earnings, 27 times earnings, right in there. So it's like, it's starting to get expensive. And now it's 33. It's way more expensive. Do I wish I still had it? For sure. But I mean, you're priced to perfection here. With that being said, we're in the FOMO market. Everybody wants to have growth. They'll probably forgive and forget because the silver lining market that will find a reason to buy this dip. That's just the way this market is. Maybe give it a day or two for the dust to settle, but I'm not going to short Microsoft on this because I'm telling you, it's a tough market to short and it's a tough market to be bearish in.
Boy, oh boy, this price action is absolutely all over the place. I mean, it didn't really rebound off the rebalancing, right? We talked about that, and it got hit, right, because of the rebalancing, and it didn't get much of a retracement, nowhere near the 50%. I'll give you numbers for today. Obviously, keen on that pre-market low of 335. That's $3.50 away. I'm not sure that that's safe, but I think for right now, the only place that I see multiple lows in the same area is like 327, between 327 and 328. Now I know that's another $10 lower. But that's what, I mean, to me, that's where the next daily support comes in. Boy, I mean, when they take on a tone after earnings, you got to be careful. And I'm just looking at this delta, and yeah, it popped. It had the high of the move on its earnings day. That's been under pressure. I just think if you're looking to sell this thing into strength, I think the best you can look for is the bottom of yesterday's range at 345. Like if they get some kind of rip roaring rally, I'd look at that as resistance, and let's see if it can work its way down to 327.
You know, one thing that I'd point out to here also in the report, and I think you're 100% right, Dennis, that we might start hearing more and more about that the hype of AI is not actually showing up on the bottom line. And this is what was my concern in the long run, is that AI is, the hype is real, but are the revenues going to come from it?
It doesn't sound like that. CFO can't say that.
Yeah.
I mean,
and so that's one thing that you got to be thinking about, right? The usage is there, but is there actual revenue coming from it? And then another major part here on Microsoft mentioning that the OEM revenue is down, device revenue is down, personal computing revenue is down. What does that show? That shows concern for me on recession, because people are not buying computers. People are not buying up. No one wants Windows Word anymore. No one needs it. I mean, let's just be honest.
Well, and maybe that's not, so maybe that's a Microsoft issue. They have definitely a lot of the products they were selling that are not doing great. That's why they need Azure right now. They need that growth in cloud because this is the driver of the multiple here. AI has been the driver of the multiple, and they just completely that. So, I mean, it depends on how much that media runs with this narrative. Like I haven't seen them talk about that comment much, but you know, and maybe they don't want to talk about it. The market media likes, you know, they like the market higher, but you know, on this show we talk about what we see. I still think it's tough to just come in here and say, yeah, they're going to knock it down. Logically, they should knock it down. Logically, I think Microsoft should be down 30 points on this. Logically, but this market isn't trading logically anymore. It's trading off of FOMO and momentum. So that's why I don't short it down 12, because I've seen, you know, like I think it's worth more, but it doesn't matter what I think. It's what the market thinks. And we're still in a bull market. We're going to get the Fed commentary, which could change things here at 2 o'clock.
That's
but,
big too.
you know, if he's, you know, and if obviously he's, you know, somewhat, you know, talking about like a one more and done, that could drive the market rate back higher. So you've got to be very careful taking a bearish thesis in a bull market, and this bull is not dead yet.
And just to put it in perspective, 30% of more personal computing makes up Microsoft, and then intelligent cloud is 37% of their revenue. So just trying to focus on different areas of their business. If 30% of their business is struggling pretty bad, I don't see it too much better.
33
right now.
times earnings. That's why it's not in my long-term portfolio anymore. So it is a value game. Like people can say, well, Microsoft always goes higher. You know, some people in the chat saying that. You look at the chart of Microsoft from 2000 to 2015. It took 15. It hit its high in 2000. It took 15 years for Microsoft to get back to that high. You can't see it there because you are going back to 2000, but that was the bubble.
No,
Microsoft
but this was
trading 60 times earnings back then, though. I remember it was like 60, so it wasn't 33. It was twice as high. But I mean, you've got to watch when you're investing long term. You do want to, you know, understand the multiples. As long as they're growing like crazy, it's okay to pay 30 times earnings. But when growth starts to slow, that's where you start to have problems here. I just can't bring myself on a company of Microsoft size, not really, you know, firing on all cylinders, but firing on a couple of cylinders to pay 33 times earnings. So, but you know, the market's probably going to buy the dip because it's what it does.
There might have been a company that did it a little bit better, right? Let's go to Alphabet. Let's go to the Google report. And one thing I wanted to mention, I thought this was pretty funny, but maybe Google did better because they mentioned AI more times.
Yeah, they did.
Microsoft,
They did.
Google mentioned AI 80 times versus Microsoft's 65 times.
That's what it's all about.
So that's what it might have been. Hey, those algos, man, they definitely were counting it, I'm sure. Let's get to the action here from Alphabet.
Who counted at Benzinga? Who was sitting there counting?
Do you have to question that? Come on.
Was it you?
Just take
Were
one
you
guess.
counting?
Nope, it wasn't Money Mitch. Who
else? ChatGPT.
It wasn't ChatGPT.
Who'd you have?
It was ChatGPT.
Come on, Dennis. You know him. You've been seeing him work hard in the background.
Did you have Nick?
Of course, my boy that heard AI in his sleep.
We love you, Nick.
Nick Brown, of course, looking out after us. But Nick Brown's been helping us out here. He's been interning here at Benzinga. So definitely give a shout out to Nick Brown, of course. News by Nick, if you want to check him out on Twitter. Let's get to the action
there,
here.
Man. We got Nick. Nick digs for us. We yell out at Nick. He digs for us.
Oh, trust me.
Nick finds good stuff.
That's what he's there on live trading for. He's just a dig. So if you need to dig, let him know. Alphabet Q2 EPS coming in here at $1.44, beating the $1.34 estimate. Sales at $74.6 billion, beat the $72.82 billion estimate. And now there were some comments in the earnings reports that I thought were pretty interesting. Of course, CFO saying that the financial results reflected continued resilience in search with acceleration of revenue growth in both search and YouTube, as well as momentum in cloud. We continue investing in growth. Search revenue came in at $42.62 billion, cloud revenue totaling $8 billion, and YouTube ad revenue hitting $7.66 billion in the quarter.
Nice rip on this one.
Yeah.
They took that nice rip. I'm just gonna, for the technicals, just for today, I'm gonna give you that pre-market after hours high at 132.70. But I think the more I'm gonna look at this, try a little bit longer term. I think it's all about this hold at 130 today. I mean, that's gonna be my swing level. Former high of the move, 129.55. You're still not comfortably above. You're still above that right now, but if you're looking for a push to 140 here, you're going to have to find a host of buyers here at 130 to support the market at 130 to build a foundation to keep going higher. So that's what I'm looking at for Google in the short term. But pretty good, man. They make a lot of money, don't they, Dennis?
23 times earnings, I believe, only here. So again, you're getting a discount compared to Microsoft here. The question is, and that's the biggest question, I think this actually helped them too, that, if Microsoft's talking about their, AI sales growth being gradual, it doesn't sound to me like they're imminently going to murder Google search. So, that probably helps them too. And I mean, these two companies are literally at war with each other. So
They
it's
are.
not
You mentioned it.
surprising that one, they're both trying to say AI. They're both Google's trying to protect, obviously, their monopoly on search. And Microsoft's trying to get a piece of the action. So, 23 times, it's not a cheap stock, but it's not that expensive either, especially if they can get the AI products going.
Yeah, I think at the end of the day, I'm going to go that Google might reach new all-time highs. Why am I going to go on the limb on that? Big thing for me is I think they're going to have a huge lift in YouTube ad revenue as you start seeing what? The Sunday ticket. I've been talking about this. This is going to be next quarter. I think this is actually going to drive a big surprise revenue growth in YouTube. And then the ads should also
for
get
the
the lift.
football. Are you talking
Yes,
about
for the football. For the
professional
change in
football?
football. And I think
I
this is
mean,
massive because the truth is there's been a lot of pent up demand in the NFL because we all have wanted the Sunday ticket, but a lot of us didn't do it because it was on DirecTV. Now we get the option to do it this year. I think you're going to see a lot of people go and get YouTube.
The DirecTV has officially lost Sunday ticket?
They still have access to it, but YouTube TV is also going to, it's a streaming. Well. You're going to have a streaming, and then you also option. Have the direct, like the satellite option.
You know what sucks about streaming sports is the bloody delay. It sucks. And, because I'm like hardcore hockey, and if you're watching streaming, my phone starts, oh, what a goal. And I'm like, what are you talking about? And I'm like,
really?
Boom, 10 seconds later, the goal. It's like 30 seconds, Joel. The streaming is brutally delayed. It is. It's like 30 seconds. I mean, in some cases, it might be a little bit less, but it's like 30 seconds delayed. So, I mean, if you're just sitting there, I have to shut my phone off. If I'm streaming something, I shut my phone off because I don't want to know about the goal before I see the goal. So, because somebody who's watching, old school cable, which is direct line in, is always faster. So the streaming, it does suck that it's slow. Intern saying the same thing. I know he's complained about it before too. I don't know why they can't figure that out, but the streaming, because it's got to go up and it's got to do whatever it's got to do, it's slower. Like satellite was always slower. You got to go up to the sky and you got to come back down.
It's latency though. It's just a part of the latency to get you the quality that you're looking for, right? So essentially you need to create a buffer so that you can give that quality.
But what Dennis, what Mitch is mentioning here, though, is like a show. So, there's not touchdowns being scored, right? The Sunday ticket's like more of a preview show.
No. It's all access to games, Joel.
Yeah,
all access to away games. Away games. They can't be in your home network, right?
Okay.
But let's say for me that I'm a big Dolphin fan and I like watching Dolphin football games. I usually have to go to the bar down the street to go watch the game
because they're delayed on the streaming.
I would have to go down the street to actually watch that game, or I would normally do the red zone, and that's just touchdowns. Now I can actually get Sunday
the game, huh? That's going to be a big boost. Yeah,
I have old school digital cable, Joel.
Yeah,
and I can stream, so I have both. So I have old school digital cable in my office. And the old school digital cable is at least 25 to 30 seconds ahead of the stream. Not joking, way ahead. It's not 5 seconds or 3 seconds.
Yeah, you're
it's
right on that end.
30 seconds. It's a lot.
I even have a little delay in my house between two TVs. But it's only a couple seconds. So,
yeah, a second or two you wouldn't care, but I'm not joking. It's 30 seconds, the delay between streaming a live sporting event and watching it through old school digital cable. A lot of people don't have old school digital cable anymore. They've just cut the cord, so they don't realize. But that's the one benefit to old school digital cable is when you're watching your hockey game, you're getting that fast. You're getting it fast.
Okay.
All right, now I'll do a little wrap up here for Google. Of course, they mentioned accelerated revenue growth in both search and YouTube. They also continued investing in growth. They also said they had momentum in their cloud compared to Microsoft. It's telling you devices down, a personal computing revenue down, intelligent cloud coming down, right? I think we know which one's doing better, at least in the short term. It's Google right now. We'll see if Microsoft can come back.
One other thing I just want to point out between the two companies, Microsoft, making that Activision, deal. I mean, they're looking for, they're looking farther on down the line for growth. Yep. And that was a big pickup. So I don't know how long that's going to take to work through the pipes. Google, wasn't Google Alphabet? Did they start Alphabet because they were going to acquire a company with every letter in the alphabet? Wasn't that the other,
Yeah,
or
that
did
was
I
something
make
like
that
that.
up? Or
I
did I
don't think
make
you
that
made
up?
that up, but let's
They're
keep
not.
going. Let's go to the next area here. I'll bring us over to the banks talk that we have for today. Of course,
Yeah.
Wells Fargo is trading higher after the company raises quarterly dividend and announces a $30 billion stock repurchase program. But that isn't all the news. And of course, the banks, as we're really taking an eye on PacWest, of course,
Yeah.
as their yesterday's announcement coming in the middle of the day. PacWest Corp's, of course, trading higher after the company announced a merger with Bank of California here. And PacWest stockholders will receive 0.6569 of a share of Bank of California's common stock for each share of PacWest common stock.
Lots to unpackage here. So yesterday, there was rumors flying around that PacWest, it was during the day that PacWest was going to get bought, and they were already saying by BANC. So the rumors were out there, but we didn't know the price. And on the initial, BANC went down and PacWest just went slightly higher. But then as more material, people were saying this is going to be a take under. And then they started
I don't know about
hammering
that.
PacWest, like down to the tune of it was down like 25%.
I saw
So they're
that.
like, oh boy. And then they started rallying BANC because they're thinking, oh, they're getting a discount on the assets. Like there was rumors out there that it was going to be a hell of a lot lower price. It was all just rumors though. And then right at 4:00, they announced the deal. And it wasn't that bad. It was a take under. It was, but
A little
if you do the
bit.
math, 0.6569. So it was slightly lower than where the stock was trading, but it wasn't massively lower. And that's why you had the violent spike. So now this is going to trade, risk arbs out there, it's going to trade off of BANC. So BANC being your leader here. And you will see, obviously, as BANC goes up, PACW is going to go up 0.6569 shares worth. So I don't think they're going to come in and antitrust anything on the banking sector because there's been too many problems. They want the banks to consolidate more. So you're going to see this merger probably goes through. And PACW, BANC, that's your ratio here now. So as BANC moves, PACW will move 0.6569. That's what you want to know.
I tell you, under any kind of circumstances, when a stock is getting, taken out, I don't think my initial reaction would be to sell.
I know.
And I looked at it and I'm thinking, wow, this must be a really low price or whatever. And I see it go down, and then I don't know what I don't know what rumors came out that it was going to be a take under or whatever.
They were saying it on CNBC too. Like there's rumors out here this is going to be a take because they're like, why is the stock trading down? It's getting bought out, and this was before 4:00. There's like there's rumors this is going to be a take under.
Look at the action in KRE. Look at how the action went in KRE because
well, they started hitting. They're like, oh my gosh, is there problems here? KRE got hammered on it initially because they're like, oh my goodness. Yeah, is there problems here? Like, is there banking problems again? No, it wasn't that bad. So, and then obviously KRE's right back up here now. Yeah, great point there, Mitch. They started hitting all the regional banks to a certain extent, the smaller ones, because they were worried like, whoa, are we back in regional banking problems? But it wasn't that bad. The take under price wasn't that bad.
Yeah, let's just take a look at BANC. I mean, probably still getting a pretty good deal on this. It popped up to 17 yesterday. That's a big move for it, or it popped up in the after hours. I'm still looking at this $16 area from yesterday. A lot of people probably got caught on that spike up. So you clear 16, things look open between 16 and 17, but very unusual move for that stock, the range that it had yesterday. So maybe a couple days of consolidation, let the street try and figure this out. But keep an eye on yesterday's high at 16. The daily high was at 1608. And for the Wells Fargo, if Dennis will use his comment, if you're buying Wells Fargo up $2 over on anything, you're doing it wrong, because it takes so much stock to move Wells Fargo. I don't think you have any shot at getting it 47.55 today. And I think you might even struggle. What's been the high of the move? Well, let's do a
kind of hanging out
here.
a buck up.
Yeah.
So multiple things. It's just crazy good news though. Like, I mean, it is good news. And it's a great point, Joel. The banks just don't move up 10, 12%. They just don't have huge moves. When you're buying it up 4 or 5%,
No way.
It's probably not going up 7 or 8. So you're in all likelihood going to be on the wrong side of the trade. That comes right back to Tim Quas. Look at the average range. Look at stuff like that. What does stuff move? What is stuff worth? I mean, I specialize in like, what is this worth? Because, I'm trading news, I'm trading, after hours sometimes, headlines, and like, what is this worth? It's worth $1. It's worth $1. Again, remember 30 billion authorized. So they're allowing themselves to buy back as much as 30 billion. That doesn't mean they're going to come in and actually do that much, but they're authorized 30 billion. So you get a Chevron authorized, you're like, they got a lot more cash flow. And this is huge, though. It's a huge 30 billion on a Wells Fargo buyback. To give you perspective, the company's worth like 175.
That's crazy.
So you're talking about like a 16 or 17% of the float.
Dude, give
buyback.
that to the shareholders.
That's big, man. Give it to the depositors is what you should be saying. They're trying to give it to shareholders, but multiple people reaching out. I'm still getting nothing in my checking account at my Wells Fargo, yet they're doing enough to give me a $30 billion buyback. This is not a good PR move. I will tell you that much. This is going to get headlines, 30 billion buyback, and be like, why am I still getting 0.05% in my checking account if you're doing $30 billion buybacks and interest rates are up to 5.2%? So you want to charge me 7.5 on a loan, but you want to give me 0.05 in my checking account. What's up?
Well, Dennis, we know exactly what's up. They're trying to get that risk-free, baby. They're taking your money and going to get that risk-free and being
yeah,
guaranteed.
We'll make the difference. We'll
I
enjoy
want
that
to bring
difference.
this just the price action in this in the Wells Fargo. I just want to bring it something from yesterday, and I wish I would have made a little bit more of a stand on it with the Walmart. I mean, the thing got upgraded at all-time highs. Remember, we were talking about Dennis. I hope he didn't try to buy that off the open yesterday because it opened and it was right near the high of the session, right? 160.46, 160.52. So if you bought that just a big thick stock like that, trading up, I mean, it traded up to 160, 150 yesterday. And I just got to look at Wells Fargo in the same way. Even to open up at this level, you're going to have to chew through some fat. And I don't think this thing right now, I think there's big sellers at the 47.25 area. You got
one
through
thing
it.
it's got going for it, Joel, before you get too bearish on it, one thing you got going for it is that this is value day. So you have Microsoft down, you have the S&P holding up. The banks are a good story here because the PAC-W wasn't that much. I think a source of strength today is going to be the banks. I think you could see a lot of banks that could end up going up to 2% on no news. So that could be a driver. Wells Fargo is probably worth 2% because of its news. But if you see a continued rotation today into value, and maybe that changes. Maybe Microsoft gets bought right off the hop. It's already starting to get bought a little bit. And maybe they rotate right back to tech. But if tech, these are all ifs. We always set up scenario analysis. Not telling you what's going to happen, setting up scenarios. If tech remains depressed today, and you're seeing a lot of cloud, a lot of caddy stuff, Amazon's down, the cloud stuff is down. If that remains down, they will buy something else because that's what they do. They just don't go to cash. So if they're buying something else, a logical target today would be the banks. So I'm actually kind of bullish banks just for today. Like Citigroup, Bank of America, barely up. You're looking at Wells trading up 2%, but they're not up much. Now, again, that can change. Things can change very quickly. Maybe we get more news. There's other things that can change that. But right now, they look like, at least last night, they were trying to rotate into the banks.
All right, let's get one more before we get our guest on today. Let's go to Boeing here as their Q2 EPS coming in at a loss of 82 cents, beating the loss of 84-cent estimate. Sales of 19.75 billion beat the 16.58 billion estimate. Boeing says that the 737 program is transitioning production to 38 per month and plans to reach 50 per month in 2025 and 2026 timeframes. Still expected to deliver 400 to 450 airplanes this year.
Numbers were fine. It's not a cloud stock, even though the planes go up into the clouds. Some people.
This looks great, man. This looks great.
So yeah, and it's been a consolidation station. I think they report on the right day though, because when you get Microsoft hit and a lot of the cloud names are down, tech's kind of under a little bit of pressure here today. They're thinking non-tech, and Boeing is non-tech. So I think that's why you're seeing this stock. And again, the earnings were fine. They weren't they're still losing money. I mean, they're amazing at losing money when they're obviously the airlines firing on all cylinders, making record profits here. But Boeing's still losing money.
Look at that sales.
Record profits too, I think, on the bottom line. I don't remember.
I don't think they're caring about the earnings per share. They're not caring about that yet.
They're seeing the sales go higher here. They're seeing a potential turnaround story here. And it's reporting on the right day. I'm not fading it.
Yeah, and one thing that I'd point out is industrials have been pretty strong, right? It's not an area that I want to be fading.
Very strong.
Just look at XLI. I've been talking about this for like over a month now, that industrials had been looking like they want to just keep going. And they keep going, right?
I'm looking at the EPS here, and there's some ugly numbers here for the EPS. This is an EPS beat, 2.38. The revenue over 3 billion better, so that's what they're liking about this report. But I talked about this one, I think, on Premarket Prep Plus yesterday, and going into the report, I think you just gotta. You're looking at the monthly here, and 223.91 was your high from last month. Now you snuck above that in the pre-market, going not by too far. You went to 220. It looks like 224 right on the nose. So that's my bogey here. That would be a breakout on the monthlies. It struggled there the post-COVID run, the initial silliness in 21, it did get above that level, getting like 270, 280. But for me, it's just, what can you do at 224? Not only, trade there, take it out, close above it, and build a foundation. And if you're looking for a breakout, that's what I'd be looking for in Boeing, would be a close above 224.
If you're looking for the laggard trade, the Boeing has been a laggard too. So, you have a lot of, to your point, Mitch, XLI breaking out, making new highs. Boeing's $200 from its all-time high. So if you're looking for something's been in consolidation, something laggard, there's a lot of reasons not to fade the day. Spinner make a good point on the free cash flow too. It's got that going on, which is good.
Hey guys,
so that was
airlines
fine.
aren't doing too bad, right?
Oh, did we forget about Angie?
I think I'd be scared. I'm not fading it. I'll say that I'm not fading this.
All right, let's go
ahead. A lot
of
times I'm up 3-4%. I naturally want to fade it. I'm not fading this one.
All right, let's go ahead. Let's get to our guest today. You guys smash the like. Let's keep it going right here. Pre-market prep.
Angie, are you outside?
I am. You caught me in the outside office today, so I figure this is the best way to guarantee we don't get the summer break interview interruption, courtesy of Colton.
Man, isn't it like 90 degrees?
No, it's gorgeous right now. I think we're I'm under the shade, so it's 70 degrees. The sun hasn't hit me yet, so
pretty good.
I'll go back inside.
I like that background.
I wish I could bottle Michigan summers. That's the only thing I wish I could do. A Michigan summer, it makes it worthwhile in the wintertime. I can tell you that much. So glad to be here.
Okay. Angie Setzer, founder and partner at Consus ROI, following the commodities markets for a long time, all the way through the pre-pandemic, through the pandemic. She told me I was not going to go hungry and I needed to stop going to Costco to buy rice. I did finish off my second bag of rice, though, that I bought during COVID. But let's talk about what's going on. And there's two things. I want to talk about what's going on in the Black Sea. And then what about this weather on crops? So let's start with the Black Sea and what's going on over there.
Yeah. So what isn't going on right now, it feels like, right? There's just a new development every day. And currently, I would describe the situation as eerily quiet. So we had Russia, obviously, last week pull out of the Black Sea Grain Initiative and say that they couldn't guarantee the safety of any ships, working their way into Ukraine through the Black Sea. And obviously the market reacted accordingly. And then we kind of level heads prevailed, right? Because in reality, we've been spending hundreds of millions, if not billions of dollars to figure out ways to facilitate alternative export routes for Ukrainian grain anyway. The biggest thing that Russia has had, over the West and over just about everyone is the Black Sea Grain Initiative and the control over whether or not Ukrainian grain can flow through that export channel. And so when everyone kind of cooler heads prevailed, we were like, okay, well, as long as he doesn't attack port infrastructure, we're fine, right? As long as we don't see merchant ships attacked, as long as Putin doesn't attack port infrastructure, we're fine. And so apparently he read that type of commentary. I'm kind of tongue in cheek when I say that, but reality is we kind of saw some targeted attacks on port infrastructure, both in Odessa, where that would be where the grain would flow through for the Black Sea Grain Initiative. The Danube ports have stepped up as a huge lane of importance between them and the solidarity lanes into the EU. We basically can take care of all of the Ukraine grain export needs that we have. But to see Putin come in and earlier this week, kind of do a strategic attack on the Danube ports, different, it kind of put us into a different level of risk. But now he's got Africa, the leaders from several African nations in town and is working with North Korea. We have the BRICS summit in a month, this, that, and the other thing. And so, yeah, it's quiet all of a sudden. And so now we're waiting to see what the next step is. And the biggest worry is Ukraine does something to impact Russia, or we see further attacks on export infrastructure.
What about the weather, Angie? I mean, it seems like it's not affected. I mean, soybeans. I mean, is it hitting all the hot weather, hitting all the soybeans or whatever? Because I see the beans in the teens. I see them at a multi-year high, but I see corn kind of lagging. Now corn's still kind of strong, but I'm looking at the wheat. Tell us what's going on with the weather.
Yeah, the weather has been impactful. We had a lot of areas at the start of the growing season here in the U.S. that had the driest May and June, on record, or one of the driest on records. And so that creates concern. We've never really dealt with significant dry weather. Well, we have. And obviously it can go a couple different ways. We can have the 2012 production reduction sort of scenario, or you could have a 1992 end up with a record crop scenario, depending on how weather works out. And reality is we'll probably be somewhere in between. And so for the bulk of the growing area in the U.S., the heat really hasn't come on until this week. This week is really the first big push of heat that we've seen. And we've had a couple, sporadic sort of bumps where we got into the 90s in Iowa or something like that. But this week's the first week where we'll be close to 100. The biggest thing that we're seeing, though, is that the heat pushes back south to the southern areas where the bulk of production, the bulk of what has taken place when it comes to important production, in the southern states, Kentucky, draw a line, southern plains, south, that's already been kind of done. And so the heat to the south isn't the greatest, but from an overall standpoint, we're going to be hot across the Corn Belt, through this week into Friday, but then it cools off again and the forecasters are calling for an increase in moisture. And so we're waiting to see if that happens. If it doesn't, if we see a continuation of heat and the moisture doesn't show up, is currently forecast for next week and beyond, it's a whole different ballgame. We just really have no room in soybeans right now to have any sort of yield loss or major production loss without something else changing. And so it's going to keep soybeans on its toes. Corn has a bit more room. The bulk of wheat production is wrapped up across the U.S. We have some spring wheat concerns in the northern plains, and then we have the Canadian prairies. So wheat doesn't get impacted as much by weather, at least in the northern hemisphere right now, as much as what corn and beans would be. But another thing we're holding our breath over, I'm surprised I haven't fallen over. I feel like all I do is hold my breath in this business.
One thing that I'd like to ask about this, Angie, is do you think that it's more the dollar playing in effect, or are we actually starting to see these prices start to rise?
Well, we're seeing the prices rise because we'd completely removed risk premium from the market. Like, we'd kind of just assumed that Russia and Ukraine were going to continue to do what they were doing in the areas that they were doing it, and it wasn't really going to impact grain prices too much. You'd seen the speculators, really short the wheat market. They developed one of the largest wheat positions that they'd had in quite some time. You'd seen folks go short the corn market. I mean, we saw speculators go short for the first time in how many years? And so I think you saw, some folks kind of jump the gun on that side, and that's fueled the necessity to add a risk premium back in, and so we're going to kind of continue to watch and see what happens there. But we could go really sharply either way, because overall, fundamentally, from a cash grain standpoint, the physical products have only increased slightly. Like the cost of physical products have only increased slightly. You've seen some increases in freight, you've seen some changes in logistics, things like that. But from an overall standpoint of physical supply availability, especially in the European Union and out of Russia and some other channels, Brazil, the supply availability is much greater than what we had at the end of February in 2022 when the invasion initially happened. And so there's a lot of different things that are happening, and it's really kind of created that volatility that we've grown to love, maybe.
How is potash doing right now? I've been starting to see some of these stocks start to get a little bit of a lift. Do you think that there's going to be a continued lift there?
I think that catches it catches a bid similar to what you're seeing with corn and wheat. It's cheap comparatively speaking, especially when you look back at what we had seen after the 2021, we'd had the supply disruptions we'd had prior to the war. A lot of folks didn't realize that the US had slapped an import tariff on Russian fertilizer imports into the US. And so that had helped really kind of increase some fertilizer prices and limit supply availability. Quietly last summer, those import tariffs got rolled back. So that's really kind of helped on that side. Supply is good, but anytime you see the core market kind of run up in price, there's always an idea that the farmer is a little bit more flush in cash. And so you tend to see inputs follow that, especially with the volatility when it comes to, what happens if the situation with Russia escalates and we see the European natural gas prices soar higher again. And, there's so many factors at play when it comes to fertilizer. That, that's just, it's going to catch a bid, rising tide raises all ships sort of situation.
Yeah, I like that leading indicator mentioned to keep your eyes on corn. So appreciate that mention, and something that I'll definitely learn from. Now, one thing that I am seeing out there, and I wanted to hear your thoughts on this, is what about 3D steaks, Angie? Are you a fan of 3D steaks? I don't know if you're like me. I'm like, no, man, come on, man. I need me a good old T-bone steak. I've been seeing, of course, cattle continue to rise. And then I'm getting to the point. Are we going to get to the point where we go to the grocery store and we got to determine, do we choose the 3D steak or the real cow?
Oh, man. I mean, everything is cyclical in cattle prices. And so you've really seen... You've seen several different things line up that has really made the herd smaller. So like the cattle herd is the smallest that we've had. The beef cattle herd is the smallest we've had in over 50 years now. And a lot of that is just stuff that has lined up. Corn prices surged. Southern Plains dealt with a drought. You didn't have access to stuff to feed cattle with. The prices increased. I mean, it made sense to just bring them into the marketplace. You're going to see the prices stay strong. We've got to, see a basically a little bit of a turnaround, which I think we will. It's going to become profitable to raise cattle again. You're going to want to see herd sizes increase. We've got weather that has improved. Pasture conditions are a heck of a lot better than what they've been. We should have a decent amount of grain available to feed. The problem is with cattle is it's very different than like chicken or hogs. Like chicken or hogs, the breeding cycle is a few months, whereas with cattle, it takes you almost 2 years from birth to harvest. And so you really aren't going to see this sort of snap your fingers and in a few months, all of a sudden we're going to have supplies back to where they were. For the most part, you are seeing retail prices creep up to where demand is getting cut into a little bit. You've seen some changes with other available protein supplies. So folks are kind of leaning towards maybe pork because you saw hog prices just absolutely get decimated. I mean, you could buy a bacon wrap pork fillet at Meijer here for $1.50 at one point. Like, how ridiculous is that? But I'll buy 20. Yeah. And so there's a lot of things that are happening in that protein sector, the livestock sector. The 3D meat is fine. You may see some consumers lead into it, but I really kind of say it's similar to like your Beyond Meat sort of direction. Okay. Your target audience will try it. Folks like me, not gonna. You know what I mean? Like, it's just no, thank you.
Give me the real thing.
Where's
I want the
beef?
real thing.
Exactly. Like that's.
Right
it's there's room for everyone, but it's not for that on my plate.
Angie Setzer, founder and partner of Consus ROI, a great follow on Twitter, the goddess of grain, joining us here again on Benzinga's Premarket Prep. And Angie, I'm going to get out there to see that operation soon. I know I said that before, but I'm going to get out there on the west side of the state and visit you real soon. Thanks, Angie. Great information.
Thanks for having me.
Always great. And I'm sure Angie throws some good barbecues. So I think you got to get out there, Joel.
For sure.
All right, let's get back to the market. How we looking, Joel?
We just made a new low for the pre-market session, 85.75. If I told you I had support here or a level, I would not be honest with you. Tuesday's low is 79.25. So I'd be looking for that as our target on the downside. But man, if they don't get there really quickly off the open, then the buy the dippers, right, will come in and get us back. Let's see if we can get back to unchanged on the session. But that's what I'm seeing. Triple D, you seen anything out there in balances?
Still pressure, same story, a little bit of rotation. The IWM's been green all morning. It's starting to try to go red. We have been leaking a little bit on the S&P. You do have rotation. The banks are definitely a pocket of strength here. We're definitely seeing strength in the banks. We're also seeing pockets of strength from, consumer staples. Coke reported earnings, which we didn't get to. They were okay, not great, but they were fine. And that's
let's
why
go to that one. This one's
maybe we should
back right now. I think it's an interesting stock definitely to look at today. Q2 EPS 78 cents beats the 65-cent estimate. Sales of 12 billion beat the 10.56 billion estimate. Coca-Cola sees fiscal year 23 comparable EPS growth of 5 to 6%. Free cash flow at 9.5 billion. But one thing to mention here, Q2 unit case volume growth flat.
It's not a growth industry.
So they're not selling more Coke. They're just selling more expensive Coke.
They're reporting on the right day because we're kind of, in a little bit of, defensive, nature. The market's playing a little bit of defense. So Coke reports on the right day. I tweeted last night that Coke's likely to go up on the report because one, if they say anything okay, they're reporting on the right day. It's all about kind of sometimes the day you're reporting on. Right now, it's a little bit of a risk-off morning. So Coke's a risk-off stock, meaning it actually goes up when the market goes down. So you're seeing that. But, you got a PE on this thing of 27. Forward PE is 24. This is not a cheap stock. It's got a 2.9% dividend. I'm going to keep coming back to the same thing. Why own Coke when you can get 5% in the treasury? You're not going to get huge gains off of a Coke. If you're jumping there for a 2.9% dividend yield, that's over 2% below the risk-free rate. So, and I look, and it's had a pretty good run here the last 3 or 4 days. I think 65's major resistance on this. So could it eventually see 65? Maybe. But why? The only thing we're going for today is it's reporting on the right day. But I think, why do I want to own Coke? This is not the stock that I want to own right now in a 5% risk-free environment. If interest rates drop back down to 1%, Coke becomes a nice alternative. But Tina is dead, meaning there is lots of alternatives right now. The Tina, there is no alternative. That trade is long gone. There is lots of alternatives, and there's risk-free alternatives here. I don't want to own any staples. I almost own none in my long-term portfolio because what has replaced staples and preferred stocks is cash. So I'll take the risk-free rate.
Throw out the high, throw out the low. You're buying Coke up over $1 at 63.66. That's above this May 17th high. They took it down $1 here to 61.25. That looks like an overshoot. But for me, we broke it. We struggled at 62 in June for a few days. And then we got through it very nicely. Couldn't quite get to 63. For me, I'll say, okay, it traded up. They like the report. As long as it holds 62, yesterday's low, 62.05, all right, then I could play it. But if it loses 62 here, I'm just not liking it. Not a lot between 62 and 60.5. And 65, oh boy. You would need like the Fed to cut rates like a half a point, I think, for this thing to get to 65.
There's no FOMO happening in Coke.
Coca-Cola. Yeah. Too much time on Coke. I like
Market's driven on FOMO right now. There's not FOMO in Coke.
Here's one that's getting a lot of recent volume, but has been in the gutters for so long. Teladoc reporting today.
Oh, yeah.
And I think this is actually one to keep an eye out for. Teladoc Health Q2 EPS at a loss of 40 cents, beat the loss of 41-cent estimate. Sales of 652.4 million, beat the 649 million estimate. They do see a kind of not the best Q3 EPS outlook, a loss of 50 cents versus a estimate here of a loss of 33-cent estimate. So that's not the best outlook. But man, there's been some quite amount of volume coming in here in the last like kind of month since July. I think somebody's trying to position here in T-Doc. What do you guys see?
What a terrible stock this has been. It hasn't even participated in the 2023 rally when everything techie, Kathy-like, has been going up. This stock is sitting near its 2023 lows. I mean, I think that's maybe an all-time low, 2160. No, I guess in 2017. 2016 it was lower, it was $9. But you're 4 or 5 year low here. Stock was over $300 in the height of the bubble of 2020 and early 2021 before the bubble burst, and the stock just never come back. With that being said, the laggard trades on. You have some support. Could it, squeeze up to 26? It could. I'm not trading it here, but I just say, wow, what an underperformer when we've actually had a pretty good year for stocks that have been lagging. This one has not participated, so maybe it's the sleepy laggard trade, but I ain't chasing it either.
If you want a continuation rally here, then it's important for this to get back to that area of the pre-market high. Pre-market high 25, just over 25. What was that high there? 25.18. That also represents a high from 4 sessions ago at 25.22. That's 70 cents away. So the bulls got some work to do. If you take that out, then your daily highs start to spread out a little bit. But I really like that pre-market high coinciding with your 4-day high. Coming back on the downside, if you feel you really need to own this, you could probably get a look at the top of yesterday's range if one big seller comes in. 23.89, 23.74. Well, really three highs at the 24 area. So keep an eye on that as potential support.
Well, I didn't have the best feeling for it, and it definitely it got hit hard. Snapchat.
Oh,
I honestly, I've been saying this since it got back down here. I never saw it as a $30 stock, let alone $50, let alone almost $80 stock. Come on, guys, this is Snapchat.
They had no path really to like turn this thing, and like, have they ever been profitable as Snapchat?
Well, there was a time where the advertising, Dennis, was doing a lot better. The advertising on Snapchat, they brought a bunch of advertising to it. It was doing a lot better in the stories and kind of getting the lift. But ever since kind of TikTok hasn't been mentioned as being kind of getting deleted, right? TikTok is still here, right? Now you get Threads. There's also X. Really, let's just be honest. Snap is way down the line there.
And then, it's funny that Snapchat, is obviously trading down 17% here. It's getting TikToked. You're right. We've been talking about this. I mean, Meta just continues to get the pass here, though. I've got to think some of the legacy businesses like Facebook and stuff aren't doing that great. I guess they got, Instagram's still going good, and they got whatever with Threads now. Yeah. I just feel like taking away from Snap, and maybe they buy Snap's huge support 10. So we'll just say $10, huge support. It's a logical area for it to bounce because it bounced so many times there in June. I think pre-market here, even it's kind of been the 10 area. It's actually kissed it, I think. So it's bouncing where it should bounce. So I would say if you want to take a shot off 10, I won't argue with you. But the core business is definitely under attack. TikTok. Is this something I'm investing in? No. It's something I would trade off at 10, maybe. Why does Meta just continue to get the pass though? Like,
I know it's trading up on this. I know.
Yeah, it's trading up on this. And again, maybe that's because Google, and maybe there's some other things here with Meta. But Meta reports here tonight, so is it tonight? I think it's tonight. Looking. Yeah, it's tonight.
Yes. Sorry.
Yeah. It's tonight. So we're gonna get some information from Meta tonight. They better say a lot of good things because the bar, as much as it was high for Microsoft, it's really high for Meta. Meta has
super high.
Unbelievable run. This might have the highest bar of them all. Yeah. So Meta had better talk about some substantial growth, whether it's the metaverse or AI or whatever. They better mention AI 100 times, Money Mitch, because this has a really high bar. Yeah.
I like that $10 area and Snap as well. I mean, not 1, but 2, but 3, but 4, 5, 6, 7, 8, 9 lows on your dailies at the $10 area. The bottom of yesterday's range, you're going to need one heck of a rally on this one to get to 1235, kind of close near the low. So think you might need to pick an intermediate target. I think for meta investors here, getting a pop here, if you were looking to lighten up ahead of earnings, you're getting a nice pop here, going contra to the market at this point. 302.76, that was your pre-market high. And I believe you got a daily high right there too. No, 305.46. I'd be looking for major follow through that pre-market high, and then your 3-day high at 305.46. Or I think some people after seeing that Microsoft, I know Google's up, Microsoft is down. If you're not taking profits, after this kind of run ahead of a report, well, then let it ride. All right.
So the 9 o'clock news hit here. PayPal, if you're trading PayPal, the headline here coming from the wire: Microsoft deepens their relationship with PayPal to offer a simple, flexible payment option. So if you're wondering why PayPal's popping up, and thanks obviously to Zintis in the chat here who just let us know that PayPal is popping here this morning off of a headline just dropped at 9 a.m. off Microsoft.
75 is a big level there. 75. We hit that. We filled the gap. And can we bring on the guy that told us that Square was going out of business? Remember that back in March, that short report, and it came down to the 50. Remember that? They hit it, went down to the 58 area, recovered, came back again. So that's for Square. Square's kind of flat on the day. The setup for Square, you've had what, 5 point? Yeah, let's see if you can get to 77.5. Got there a little bit through it yesterday, but that'd be getting back half of that move and try and build a base to go back and test 80. I'm going to wrap things up here on my end, just trading a couple bucks off the pre-market low. Just kind of a steady drip. We'll see if we get to Tuesday's low, get a bounce. Of course, things will be shaken up at 2 o'clock. So I'm going to go talk more detail on these Microsoft earnings. Michael James over Institutional Trading Floor over at Wedbush. So everyone have a great day. We'll talk to you later on.
All right, there you guys have it. Joel Elconin hopping out of here. We'll wrap up the day and get ready to get to the open. Going to be another one, of course, to keep your eyes out. Of course, FOMC meeting later today, 2:30. There's going to be some fireworks. Be careful, of course. Algos have a tendency of the first reaction a lot of times get faded, so it's very difficult to read. I will mention that for you traders out there that think, that's a tradable event. It's definitely for the more higher expertise type of traders, right? I don't even try to trade that mention, because the truth is, there's some wicked movement, and just be careful.
It's usually a fade everything type of thing. Like you fade the initial move, then you fade the second move, you fade the third move, and you fade the fourth move. It's kind of been the way to trade these FOMC meetings. It's going to be, again, we all know they're going the quarter. We'll look at language, obviously, in the statement, but it's going to be about the call. What is he saying? Does the media get something out of him that spooks the market or makes the market more assured that, hey, we're getting more towards the end of this? The market wants to hear that we're getting to the end of the rise, and I believe we are. But if he wanted to be tough, this stock market is allowing him to be tough, because inflation's 100%. Coming down. The stock market is hot as hell. If he wanted to be tough, though, with the stock market this high, he could still stay tough.
There is no point for him to not stay tough, Dennis.
Kind of, yeah.
Really, let's just be honest. What would be that point? There is none.
You're right. We're not seeing, the economy fall apart. We're not seeing the consumer really even slow down. One thing is, we're going to hear from what I'm interested is kind of Amazon numbers on Thursday, because if you're looking, we know the consumer is doing stuff. We know places are busy. People are going out to eat. They're flying places. They're doing stuff. Are they still buying stuff like as much as they were last quarter? The best indicator for that is Amazon. How are those Amazon earnings? Are they buying still? Obviously this cloud is a big part of Amazon now, but what about the legacy business? How are retail sales looking? Because we know the consumer's spending a lot of money doing stuff. Are they buying stuff? That's still the question to be answered. So I'm curious on that on Thursday, but he can be very tough today. Powell, if he wants to, he has every green light to be and stay tough.
Yeah, and I think that at the end of the day, it helps them to stay tough, right? Because at the end of the day, their initiative is still 2%. And if they're able to accomplish that 2% goal, you don't think they're going to be patting themselves on the back? Like, that's what they want. They want to come on the stream and just be like, hey, guys, we did it. We accomplished our initiative of getting inflation back down. And we did it in what? Like a year's time, where everybody thought that was impossible. I think that's what they're trying to do. We'll see what happens there. All right, that's going to do it for us today on Pre-Market Prep. You guys keep up with Dennis Dick, of course, Triple D Trader. I'm going to get you guys over to live trading. That's coming up next. Don't go anywhere, team. We got a lot more for you guys. And I hope you guys didn't miss yesterday, the book club, as we did have a nice book club session. Went through 3 interviews, of course, of the book Market Wizards. If you guys haven't checked that out, definitely join the book club. We have over 600 members already. So want to keep growing the book club. So I'll throw up the link right here. And now you guys get over here to live trading. That's coming up next. You don't got to go anywhere. Just stay right here. This will redirect you guys to Lord Ryan, myself, and Nick Brown. Let's see what we can get into today.